Good afternoon. This is the market update for buy sell short for Tuesday, March 5th, and the rally that absolutely no one believes in made an all-time high today. We had the Dow bust through the previous resistance of 14,198 and off to the races we went. Actually, to be honest, before we even jump in, I was kind of surprised that we really only ended up 125 points. Typically, when we see the kind of gap that we saw on the open today, we hold over plus 100, we tend to see a nice little rush higher into the last hour of the day. And I was actually thinking we were going to end up plus 175, plus 200 on the day. And in fact, we actually had a lot of selling into the close before a small little bounce. A large part of the reason for that, in my opinion, is, as I've said, no one believes this rally. Even today, with the market breaking all-time highs, you had the knuckleheads on TV and in message boards and chat rooms on Twitter, etc., shorting, calling the top, calling it a blow-off, blah, 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 the same nonsense we've heard for the last, 5,000 points over the last 4 or 5 years. And, as they say, without shorts, there's no one to cover and chase things higher, and that's where we stand right now. If we look at the 1-year chart, you can see we finally broke out of that trading range, that small little one-day market tank where it looked like everything was going to roll over. Everyone rushed in, and here we are a week later with multi-year highs and a positive MACD cross on the Dow. And the last positive MACD cross we saw was the December lows before we began that 1,200 point move. So we could see this kind of action continue over the rest of the month, really into April, without any sort of sell-off. If we look at the 10-year chart, here you can see the break through multi-year highs. Right here is when Obama said to come out and buy stocks. So in the market during Obama's term now is up almost 8,000 points. Quite a remarkable turnaround in the market. And of course, the naysayers are saying it's on the back of the Fed, blah, blah, blah. Who cares? Market's up here. Market is great. We are having fun. And the slow growth environment that we are in right now is probably, we heard it talked about back in here, if you actually traded the market back in 05, 06, 07, about them talking about the Goldilocks economy. This is a Goldilocks stock market. The way interest rates are right now and the slow growth and slow unemployment or employment growth, it's actually the perfect scenario for stocks right now. And, that's all we need to say about that. Russell, nice little bounce back right underneath the all-time high here. Now, quick comment on this. The micro-cap stocks are deader than dead and still remain dead. The action isn't all in the large caps, small caps, and still rather amazed that we have not seen a big speculative money rush into the cheapies. But that is probably going to come pretty soon. As this market continues to extend its legs to the upside, you're going to see traders looking at these cheap stocks and they're going to rush into them like they haven't rushed into them in a few years. And that's what we're waiting for right now. Bullish confirmation of the breakout in the Dow is the move that we've seen in the Dow transports. Of course, you hear a lot of talk about, well, the Dow is breaking out, but the transports aren't confirming that breakout. Here you are. Dow transports are confirming the breakout that we are seeing in the overall market right now. One thing we do need to keep an eye on, though, is oil. Surprisingly enough, oil has been selling off over the last couple of weeks, even though gas prices continue to rocket higher, but that's a whole nother story we don't want to get into. Very heavy selling in oil over the last few days, but we're back down to that 200-day moving average, and you have a lot of people waiting for a turn up in oil for them to really start to rush into stocks. So let's see if we get that turnaround tomorrow in oil. That might be supportive of a move higher overall, and you might start to see a lot of that sideline money rush into the market. But anyway, let us jump into some stock plays. ETRM. Great open on this one today, and you're going to see candles like this on a lot of charts today. We had nice rush into stocks early in the day, some very nice pops, and then slow bleeds throughout the session as the market treaded water. This one actually ended up closing right at the open price, at the lows of the day, 89 cents. Sitting on a lot of cash. Diet implant drug, as I mentioned in the email alert, we are about to get a positive MACD cross. Now, probably the reason for, I mean, we had great volume in this today, 2.3 million, but we had financing on this stock about a month ago, actually no, 3 weeks ago at 95 cents. So that's probably what we saw some of today. The financiers shorting, or not shorting, covering their shorts that they got the heads up on the financing ahead of time. This is typical action. You recall how KIPS acted for us in January when a similar thing happened. It had a big sell-off, treaded water, then went boom. I think we are going to see the same thing on ETRM. Gap fill 107 and then a move back to the 20-day exponential at $1.30 right now. RSI deeply oversold. As I said, we have a positive MACD cross. Stochastics are still deeply oversold, so the story is only beginning on this chart. And just like CLSN from last month, when we called the bottom around 115, 120 after its sell-off, and it went up 40% plus over the course of a couple of days, similar potential on these guys. And as I mentioned in the alert, they're looking for FDA approval. They're looking to submit in the next several weeks. So this stock has lost 70% of its value, and they're still submitting the drug for FDA approval. Lots of upside potential on this one, especially we saw a lot of money rushing into the speculative biotech stocks today, and that is a good sign. That's usually the first signs of speculative money coming into the small caps is when you see the biotechs moving. So very, very nice setup for us here. WYY, this was a monster mover for us over the last month or so. Big breakout move to 73 cents, and then with the lackadaisical market over the last couple of weeks, and given the stock was up 100%, it has put in a little bit of a retrace all the way back down to the 200-day moving average. You see right here, we are about to get a golden cross. That is when the blue line 50-day crosses up through the red line 200-day. Very, very bullish. Now, you recall, let me shrink this chart a little as well, that when we have these big move ups and then a retrace, what we've typically been seeing is a very nice bounce back. These guys report earnings in 3 weeks. They are profitable. Volume came in for the first time today, which is very bullish. And like I mentioned in the alert today, you see the stochastics here? Each time this stock has retraced off a run and stochastics have gone under the 20 level, the stock has gained 50% at a minimum. Here we are, under 20, ready to rock and roll. 73.90 plus is our target here. Also, one other thing to note on the chart. Check out the MACD. It's about as extreme a MACD as you can get. This is the lowest levels it has been in over a year. Typical before a reversal as well. So the chart indicators are suggesting a near-term bounce in this stock. I would be a buyer 56 cents and under. CPLI has been a great performer for us over the last few months. Each time we've gotten in off a retrace, we have seen a 39-cent gain, a 30-cent gain. Actually, no, this one ended up being a 44-cent gain. Here we are again. What are we going to get this time? 50-cent plus, perhaps? As you can see, nice oversold chart. Earnings next week. We had a nice retrace off the last run all the way back down to the 50-day moving average, looking for a break of the 200-day moving average, and then the next stop would be that 194 level. Biotech stocks are starting to heat up, and this one should give us a very nice move over the next few days. STEM. Again, this is a stock, has big news, runs big, retraces, and then runs again. This has happened a couple of times over the last several months. If you actually look at these runs, it's typically on news, then it sells off. News, sells off. News, sells off. We're about due for another one of those bounce back moves. Would be a buyer 182, 180. We're about to get a positive MACD cross. Stochastics are oversold. The stemmers look ready for another rebound, and they are still ultra cheap given the potential that is in the sector right now. Look for a continuation move on this one tomorrow. Now, there was a lot of early action on a lot of these stocks today, and then everything pretty much went to sleep. That is typical for a rally day when the large caps lead. The next couple of days is when the small cap stocks start to take off, especially if the large cap stocks flatline or only slightly go up. So for the rest of the week should be some good upside in the market. ONTY, very nice winner for us. Our first target was 235, hit 234. They are reporting earnings, I believe, today. Well, they're not out yet, so maybe Yahoo Finance has incorrect data. Whoa, what a surprise there. But chart looks ready for a retrace here. You should have booked a chunk of your gains right now, and let's see what happens. Maybe we get to rebuy it at the 50-day moving average at 204. This is going to continue to be a play over the next several weeks, so let's see what the earnings report brings if we get a retrace in the chart so that we can jump back into this baby. Now, a couple of disappointments. Well, actually not disappointments. CRME. We picked up some on Friday on the big move on Kirk's, and we ended up getting news on Monday and a nice little spike up to the resistance level at 48 cents. Nice profit area, 15%. We were looking for a little bit more, but the micro cap stocks continue to be in a funk, and this one gave back all its gains, just like Mad Cats. Mad Cats, that big pop for us last week, retraced all the way back down today to that 41-cent ad area. It's just a matter of sitting and waiting on some of these microcap stocks. They continue to sleep, but the money will come. It always comes. It's just a matter of being patient in them. My approach right now would be to sit on them small, or if you're buying decent-sized positions, to sit on them in your long-term accounts and not your trading account. That way you can ignore them and wait patiently till they're ready to move. The last disappointment, which continues to be disappointment, is SYNM. We didn't get any news about the race this weekend, and the stock, broke support yesterday. Did bounce back a little bit today. Looks like we're just going to have to wait for that, a close over 50 cents to really feel comfortable on this stock. But again, microcap stocks remain in depressed states right now. But, that could turn just like that. We could see them all of a sudden wake up. But until they do, we're not going to be loading any sort of large sizes in them. But we're going to keep watching them because they will wake up. So that's it for the video. We've got some nice setups going into tomorrow. ETRM, WYY, CBLI, STEM all look very, very nice over the next few days. And that's it for the video. If you've got any questions, shoot me an email or ask me in the chat room. Otherwise, have a great evening. Catch you guys later. Bye.